if you're buying low-cost term life insurance, which is what most people need.
You made a video called The Most Controversial Paper in Finance.
Yeah.
What paper was that?
That was a paper, we didn't have it out here, but that was a paper on life cycle asset allocation.
What does that mean?
So it's answering the question of how should your mix of stocks and bonds change throughout your lifestyle? Conventional wisdom says that you should start out riskier in stocks and then move towards safer bonds as you get older. This paper took a huge amount of data. They had data from 39 countries going back as far as 1890, I believe. They sampled from that large set of data to simulate 1 million potential sort of hypothetical lifetimes that you could live through. And then they asked the question of, in this simulated data, which asset allocation gives the best outcomes? And they tested target date funds, which increase the weight in bonds over time. And those are, a lot of people have those through their retirement accounts. So it's just one fund and it starts out when you're younger with more equities and then transitions to bonds over time. That's a target date fund. They tested, I believe, a 60-40, 60% stock, 40% bond asset allocation. There might have been some other stuff in there too. They might have tested only domestic stocks. And what they find in this paper is that the optimal portfolio from the perspective of retirement consumption utility and bequest utility.
What does that mean?
It's like the satisfaction you get from retirement spending,
okay,
measured with a formula so that it can be studied. And then likewise for the amount of money that you have left over at death. They measure the probability of running out of money as well as a whole bunch of different metrics they look at.